Stocks mostly flat as funds decide how to move them. I'm Darren, and this is 3 Things for Thursday, June the 27th. As was already announced, Chipotle did its 50-for-1 stock split, and the price is hanging out now around the mid-60s. This is an attempt to pull the price down to a level that employees and retail investors can get in. Of course, savvy investors know that nothing has really changed, and institutional investors are at much lower prices. Saying the plaintiffs lack standing to bring the case, the Supreme Court backs President Biden on the case of coercing tech to take down what is deemed misinformation. Think COVID and other topics. Something tells me this isn't over by a long shot. Japan has been trying to talk the yen into strength, but it isn't working as it hit a 1986 low. This year, the currency has weakened over 12% against the dollar. Trade while you sleep across time zones with Arbitrage Trade Assist. Sign up today at arbitragetrade.com. Arbitrage Trade is your trusted source for business, finance, and tech info.
Why was I feeling depressed when I had so many reasons to be happy? Well, guess what? Anybody can feel down. But that's not the time to just put on a brave smile and pretend like nothing's wrong. It's the time to share your feelings with your friends, your parent, your favorite teacher. In the meantime, there's a resource that helped me get back on track. For some great clues about starting your comeback from depression, visit yourlifeyourvoice.org.
Understanding market bubbles. Lessons from the dot-com era and today's tech giants. Daniel writes, market bubbles are a fascinating yet perilous phenomenon in the financial world. These bubbles occur when asset prices inflate far beyond their intrinsic value, driven by exuberant market behavior and speculation. While they can create massive wealth in the short term, their inevitable burst often leads to significant economic fallout. A market bubble happens when the price of assets, such as stocks or real estate, rise to unsustainable levels driven by exuberant market sentiment. Investors, driven by the fear of missing out, continue to buy despite inflated prices, expecting further gains. Eventually, the disconnect between prices and intrinsic values becomes untenable, leading to a sharp decline or burst. Market bubbles are typically fueled by several factors. Investors speculate that prices will continue to rise, buying assets with the hope of selling them at higher prices. People tend to follow the crowd, buying assets because others are doing so. Low interest rates and easy access to credit can fuel excessive borrowing to buy assets. New technologies can create excitement and unrealistic expectations for future earnings. And positive media coverage can amplify investor enthusiasm, contributing to the bubble. One of the most infamous market bubbles was the dot-com bubble of the late 1990s and early 2000s. During this period, the rapid growth of the internet and related technologies led to a surge in the valuation of tech companies, many of which had little to no earnings. The Nasdaq Composite Index, heavily weighted with tech stocks, surged from around 1,000 in 1995 to over 5,000 by March 2000. Sounds familiar, doesn't it? Well, many tech companies had price-to-earnings or PE ratios that were astronomically high or even negative, indicating they were not profitable. Pets.com, an online pet supplies retailer, went public in February of 2000 at $11 per share, and it quickly reached a market cap of over $300 million. Despite the hype, Pets.com struggled with profitability, and by November 2000, its stock price had plummeted to under $1, leading to the company's liquidation. Today, we see parallels with companies like NVIDIA, which have experienced explosive growth due to advances in AI, gaming, and data centers. NVIDIA's stock price surged from around $30 in early 2016 to over $500 in 2023, reflecting massive investor enthusiasm. As of mid-2023, NVIDIA's PE ratio soared above 100, signaling high expectations for future earnings. This raises questions about sustainability. NVIDIA reported annual revenues of $27 billion in 2022, up from $6.9 billion in 2016, driven by strong demand for GPUs. Investors should scrutinize financial statements focusing on revenue, profit margins, and realistic growth prospects. Avoid concentrating investments in one sector. Diversify to manage risk. Focus on long-term value rather than short-term gains. High valuations need to be supported by consistent earnings growth. Market bubbles, while exciting, can be perilous. The dot-com bubble teaches us to be wary of exuberant market behavior and to base investment decisions on solid financial principles. By applying these lessons, investors can better navigate today's market dynamics and avoid pitfalls of irrational exuberance. Stop watching, start living using Pips, our AI bot. Go to arbitragetrade.com and check out Arbitrage Trade Assist.
As you go about your daily life, look closer. Every year across America, a staggering 4.2 million youth are homeless or trafficked. Covenant House is the national leader providing safe housing for youth, 50 years strong. Every youth who walks into Covenant House gets clean clothes, hot meals, medical care, and a safe place to sleep. So, look closer at Covenant House and help us fight youth homelessness. To help or get help, go to covenanthouse.org.
Pip's Pick of the Day and it's Throwback Thursday. I give you a pick of the day every Monday through Friday, and then on Thursdays, I review all of the AI bot Pips wins over the months. Pips makes it easy for me with his 12 indicators. And this week it's AirGain, which is AIRG. They're headquartered in California, and they provide embedded antenna products, integration support, and test services. And this was a pick of the day on June 17th, as the Agos had given us a green indicator arrow up, which meant the possibility of upward movement was good. Sure enough, after the pick on the 17th, AIRG opened at $5.59 and then topped out at $7.23 on June 20th, giving us almost a 30% gain. If you want to see graphs and 12 indicators, look for my video post about Throwback Thursdays on social media, where I break it all down. If you want to put our AI bot Pips to work for you, go to Arbitrage Trade Assist, and we are not financial advisors, but we do offer a service at arbitragetrade.com.
Arbitrage Trade Analytics LLC is a privately held research company. Arbitrage Trade Analytics LLC is solely responsible for the preparation and distribution of the contents of this podcast. The opinions offered in this podcast are for informational purposes only and are not intended to function as investment advice. Seek a duly licensed professional for investment advice. For more information about the informational research and services offered by Arbitrage Trade Analytics LLC, please visit arbitragetrade.com.